I want to share something with you that's been absolutely game-changing for me. And honestly, I wish someone had told me about this years ago when I was sitting on the sidelines, paralyzed by fear. You know that feeling, right? You're scrolling through social media, seeing all these people talking about their investment gains, their portfolios, their financial freedom journey. And meanwhile, you're sitting there with money in your savings account, earning basically nothing, but you're too scared to do anything about it because what if you lose it all? What if you pick the wrong stock? What if the market crashes the day after you invest? I get it. I was there. For years, I was there. I had this money sitting in my checking account, literally doing nothing while inflation was eating away at it every single day. But I was terrified because I didn't know where to start. I didn't understand all the fancy financial terms. And honestly, the thought of losing my hard earned money kept me up at night. But sometimes the biggest risk is not taking any risk at all. While I was sitting there being scared, I was guaranteed to lose money to inflation. At least with investing, I had a chance to actually grow my wealth. So let me tell you about SCHD and why this single ETF completely transformed my approach to investing and gave me the confidence to finally get started. SCHD, that's the Schwab U.S. Dividend Equity ETF. What makes SCHD so perfect for beginners like I was? It's diversified. Instead of having to pick individual stocks and worry about whether Apple or Microsoft or whatever is going to tank tomorrow, SCHD holds over 100 different high-quality companies. So if one company has a bad quarter, it's not going to destroy your entire investment. You're spreading that risk across dozens of solid dividend-paying companies. And these aren't random companies. SCHD specifically focuses on companies that have a track record of consistently paying dividends for years. Chevron, PepsiCo, Cisco, companies that have been around forever and aren't going anywhere anytime soon. Now, let me get real with you for a second about my own journey with SCHD because I want you to see that this isn't some get-rich-quick scheme, and I'm not here trying to sell you on some fantasy. I started building my SCHD position gradually, and I mean gradually. I was still scared, so I didn't just dump a bunch of money in all at once. I bought a little here, a little there, dollar cost averaging my way in. My total cost basis ended up being $9,858, which worked out to about $27.36 per share for 360 shares. And you know what happened? For a while, not much. The value went up and down, up and down. There were days I'd check my account and I'd be down $50, $100, and that old fear would creep back in like, should I sell? Did I make a mistake? But as I'm recording this, my SCHD position is worth $9,913. That's a paper gain of $54. Yeah, it's not that much, but just last week that same position was worth only $9,700. That's a $213 swing upward in just 1 week. And that's the thing about the market. It's always moving. Some days you're down, some days you're up. But if you're invested in quality companies that pay dividends, you're getting paid while you wait. Speaking of getting paid, this is where SCHD really starts to shine and where the magic of compound growth begins to happen. Here are the dividends I've received so far. In September, I got $9.10. Not life-changing money, right? But it was my money, earned from my investment. In December, $37.80. In March, $64.40. And just this past June, $87.99. Do you see what's happening there? Each quarter, the dividend payment got bigger, and that's not just because the dividend rate increased, it's also because I kept reinvesting those dividends to buy more shares. This is compounding in action. Those dividends aren't just sitting in my account doing nothing. Every time I get a dividend payment, I'm using it to buy more shares of SCHD. More shares means bigger dividend payments next quarter. Bigger dividend payments mean I can buy even more shares. Based on the current dividend rate and my current position, I'm set to receive an estimated $369 in annual dividends. That's $369 I'll earn just for owning these shares. And if I keep reinvesting those dividends, that number will keep growing every single year. And SCHD isn't my only investment. I also have a position in FXAIX, which is Fidelity's S&P 500 index fund. My FXAIX cost basis is $10,500, about $206 per share for 50 shares. That position is currently worth $11,340, giving me a paper gain of $840. And yes, it also pays dividends. I received 10 cents in October, $24 in December, $25 in April, and $31 in July. Now, why am I telling you about both? Because I want you to understand that there's no single perfect investment. FXAIX gives me broader market exposure and has performed really well, but SCHD gives me that steady dividend income and focuses on quality dividend paying companies. They complement each other in my portfolio, but if I had to pick just one for someone who's never invested before and is scared to get started, it would be SCHD every single time. Here's why. The dividends provide psychological comfort. When the stock price is down, you're still getting paid. That makes it so much easier to hold through the inevitable ups and downs. With pure growth investments, if the price is down, everything feels like it's going wrong. With SCHD, even when the price is down, you're still collecting dividends every quarter. It's simple. One ticker symbol, hundreds of companies. You don't need to research individual stocks or worry about sector allocation. SCHD's management team does all that heavy lifting for you. It's affordable. You can literally start with whatever amount you have. Want to buy one share? Go for it. Want to invest $100? Perfect. There's no minimum investment that puts it out of reach for regular people. And here's the thing that really sold me on this approach. It turns investing from this scary all-or-nothing gamble into a boring, systematic process. And boring is good when it comes to building wealth. Every month I set aside whatever I can comfortably afford to invest. Some months it's $200, some months it's $500, sometimes it's only $50. But I consistently buy more shares, and those shares consistently pay me dividends, and those dividends buy me more shares. It's not exciting, it's not going to make me rich overnight, but it's working and it's given me something I didn't have before, confidence in my financial future. I'm not a financial advisor, and I'm not telling you what to do with your money. But if you're sitting there like I was, scared to get started, paralyzed by all the choices and all the things that could go wrong, maybe consider this. The biggest mistake I made wasn't picking the wrong investment. It was waiting so long to start investing at all. SCHD gave me an easy entry point into the market. It gave me diversification without complexity, dividends for peace of mind, and a track record I could trust. Most importantly, it gave me the confidence to finally stop being a spectator and start being an investor. And honestly, that $54 paper gain I mentioned earlier, it's not about the money, it's about what it represents. It represents me finally taking control of my financial future instead of just hoping everything will work out somehow. Every quarter when I get that dividend payment, every time I see my position grow, every time I buy a few more shares, it's proof that I'm building something. I'm not getting rich quick, but I'm getting richer slowly and steadily, and that feels pretty damn good. So if you're watching this and you're where I was a couple years ago, scared, confused, sitting on cash that's losing value every day, maybe it's time to take that first step. Maybe SCHD is that first step for you like it was for me. The market's going to do what it's going to do regardless of whether you're in it or not. The question is, are you going to be along for the ride, collecting dividends and building wealth, or are you going to keep watching from the sidelines?